So when you're young, that's like when things are really affordable, but you have the advantage of time. You can't get back time. But if you were to save, even if it was just like $100 a month starting at age 21, and you're doing that all the way up, for 40 years, that's very different. You're getting a very different outcome than waiting till you're 45 to start saving.
Hello, and welcome to Revolutionary Leadership, the bi-weekly podcast that shines a spotlight on the visionary leadership approaches Black women have cultivated for generations, yet are too often overlooked. I'm Dr. Kerry Mitchell Brown, a cultural architect, racial equity strategist, and scholar of organizational change. For more than 20 years, I have helped leaders, organizations, and communities reimagine what's possible when equity and authenticity guide the way. Each episode, we'll dive deep into conversations that illuminate how Black women integrate community care, radical self-prioritization, and collective capacity building into transformative leadership practices. Together, we'll expand what leadership can look like and what liberation through leadership truly means. Because this is where Black women's stories become tomorrow's blueprints. Welcome back to Revolutionary Leadership, where Black women's stories become tomorrow's blueprint. I'm Dr. Kerry Mitchell Brown. In our previous episodes, we talked about leadership archetypes, strategic advancement, and building your leadership toolkit. We've expressed how Black women navigate systems that weren't designed for us. Today, we'll talk about something that impacts everything else, financial protection. Because here's what I know to be true. You can't lead boldly if you're not financially secure. You can't make strategic risks if one unexpected event could derail everything that you've built. You can't step into your full authority if financial anxiety is running in the background of every decision that you make. This year alone, 300,000 plus Black women lost their jobs through layoffs, restructuring, and circumstances completely beyond their control. And for many, this loss didn't just impact income, it impacted insurance, savings, and the ability to be strategic about what comes next. So today, we're exploring a powerful truth. The real financial power starts with protection, preparation, and building foundations that give you freedom to lead on your own terms. I am so excited to welcome Leslie Batson to the conversation. Leslie is the founder and Chief Wealth Strategist at Rebel Rock Wealth and the founder and Chief Business Financial Consultant at You Bet Your Assets. Here's what makes Leslie different. She has spent 20 years in IT and business consulting, analyzing systems, dissecting processes, finding the gaps. And she brings that same systems thinking approach to personal and business finance. She's insurance licensed in multiple states, serving clients across the country. She has been featured in the Wall Street Journal. She's hosted the Rebel Rock Money Talk podcast, and she is an advocate for something that doesn't get enough attention, financial fundamentals. The unsexy essential protections that ensures bold leadership. Leslie, welcome to Revolutionary Leadership.
Thank you so much, Dr. Kerry. I really appreciate the invitation to be on your podcast.
I am so glad you're here. Your message about financial protection creates freedom, not limitations, is exactly what our listeners need to hear. So let's dive in. I got a few quick questions to help our listeners get to know you.
Okay.
What's one financial protection you see high-achieving professionals overlook, even when they know they probably need it?
Well, I would say estate planning. A lot of people think of estate planning as, just having their will written and put into place, but it's not just that. It could be a trust, which really provides much more privacy and protection. But even more importantly, when you think about the things while you're alive. So who is your health advocate? If you get ill or sick and you cannot speak on your own behalf, who do you give permission to talk to the doctors to express what your wishes are? Power of attorney, same thing. If you're incapacitated, Who can make sure that your bills get paid and access your funds and make decisions on your behalf? A guardian identified for your kids if you're unable to care for them. So some of those just basic fundamental estate planning initiatives is what I find that most families have not taken the steps to think about. And I understand it. It can be emotional. People don't like to think about, when things go bad, but we really should try to be as proactive as possible when it comes to our finances and our family of putting those types of protections in place. So I would say that's probably from a financial perspective, one of the areas that a lot of families just lack putting that into place.
Hmm, that's so true. When did you realize that traditional financial advice wasn't actually addressing the real vulnerabilities people face?
Well, if you just watch TV, if you're online, the ads that pop up, there are whole cable networks dedicated to investing. Everything is about the stock market. Why? Because it makes a lot of people a lot of money. But it also, and I'm not putting it down, right? There's nothing wrong with that, but you have to balance it out with something else in your portfolio. All this information is teaching us to put the most risk out there, put our money at risk to grow, and teaching us that that is how you have to do it. And that's just not necessarily the case. We can also have a focus on certainty, which is where insurance and other protections come into place. You can have a balance, right? It's just like if you turn on the faucet and the water is boiling hot, you're going to put on some cold to cool it off, to neutralize that heat, neutralize that sting. So it's the same thing when it comes to your finances. There's a lot of focus on investing, but you really want to first have the fundamental protections in place.
Wonderful. So, what's the financial equivalent to put your mask on first for leaders?
I love to fly. I love to travel. We don't even think about, well, I don't think about really the safety of the flight. I'm more hurried on getting to the airport on time, getting through, TSA, all that kind of thing. And then I finally get on the plane and I relax. But if you think about it, it's just this metal box that we're trusting to like fly up into the air, sustain that momentum for thousands or hundreds of miles and get us there safely. We don't even think about it. We don't even question it. And it's why, because we know the pilots have been well trained. We know that the airplanes have been well maintained. We know that the crew knows what to do in case of an emergency. So we don't even think about the risks that are actually, there. So when we hear the flight attendants say, put your mask on first, that's exactly what it means. Before you assist your child or your elderly parent, you're going to put your mask on first, make sure that you're okay, and then you can take care of others. And I feel like when it comes to your finances, it's a similar plight. Let's make sure the fundamentals are in place. That means we have, some liquid savings put aside in case some kind of emergency pops up. It means we have adequate insurance in place, whether that's for your home, your business, for you personally. It means have some income protection. What would happen if you lose your job, right? You just mentioned these 300,000 women plus. That was like the early part of the year when we heard the 300,000. And there's just been more and more women being let go throughout the year in different areas. And so we want to make sure that they have liquid savings put aside, at least at minimum of 3 months of living expenses. But I tell people the long-term goal should be a year of living expenses, but 3 to 6 months would be good of just liquid savings parked in a boring old bank account, could be in a high yield savings account, but just have that liquid money available in case something happens. The second would be having income protection at your work. And even if you don't have it through work, you can get this outside of work. A lot of people don't understand this, but it's called income protection or disability income protection. And this would come into play if you were to get sick or hurt and you couldn't work for a period of time. Maybe you have an illness, a diagnosis. Maybe you got injured, and you can't use your hands or your wrists or something like that. You can't work for a period of time. This would supplement some of the income that wouldn't be coming in because you're not working. So those are two key, just fundamental things. And then a third would be life insurance, especially if you have children or other dependents, if you still have, a mortgage or just, major expenses, you definitely want to have that. But even if you don't have kids and you don't have a home, life insurance is a financial tool that has so many opportunities for you to grow and build your wealth while you're alive, as well as leave a legacy, a tax-free legacy for your loved ones once you leave. So those are three tools that I would say is really important for everyone to have just at a fundamental basis.
Thank you so much, Leslie. If you could make every Black woman leader do one thing this week to strengthen their financial foundation, what would it be?
Honestly, it would be a really basic thing. Pull up all of your accounts and look at what those balances are, whether it's your bank accounts, your retirement accounts, investment accounts. I find that people don't actually, a lot of people don't actually look at their account balances. They don't even realize, and it might not be their bank accounts because they use that, on a more daily, weekly, monthly basis, but particularly their investment accounts. So 401ks, their retirement, they might maybe check the annual statement that comes out and they're like, okay, it's gone up since last year. I'm doing fine. But they may not even realize that it's going up just because of what they've contributed to it. It hasn't necessarily grown from the growth in the market because there are fees that are applied or just other things that could be happening. When they first start the job, they make some elections, like they select which funds they want to invest in, and then they never look at that again. They don't revisit them, they don't review them, they don't look to see how they're performing, and they could be losing out on earnings, over time. So the one thing I would say is go look at all of your accounts, take a look at what the balances are and look at where they were a year ago and see how has it improved or how has it changed? Maybe it hasn't improved or what steps you need to do to change that. Do you need to address that in any way? And do you have someone that you trust who can educate you on what's happening to help you think through what decisions to make about those investments?
Wonderful. One last question. What book, moment, or experience most shaped how you approach financial strategy today?
I would say one that's probably said many times, but it is very powerful is Rich Dad Poor Dad. That was one I read probably 20 years ago. And that was the first like aha moment I had about money, Rich Dad Poor Dad. I would say that that was probably the most influential. I feel like, we graduate, we get a job, and everyone says, go put money into a 401k. And so we just kind of do these automated behaviors because that's what we were told to do. But I don't think I really understood how money worked until, like I said, when I read that. And that made me think, maybe I should be doing things differently. I started to really look into, some of the steps that I had been taking. This is probably 10 years ago. I went and saw a financial advisor for the first time. And I, was making a great six-figure income in the career in technology. And when I had some about, basically helping me put together a plan, number one, I had already paid to me a substantial fee. Number two, I don't feel like they shared anything more than what I had seen online, right? Nothing different, nothing new. And number three, I felt like, although they did mention, the importance of having the savings put aside, basically everything else that they recommended was just putting all my money into the market. And I don't know that that was, what I would say sound advice because like I touched on before, I think it's really important to have a review of what types of insurances you have in place, an estate plan, just again, I consider those the fundamentals. They may be a little challenging for people to think about just because there's an emotional tug, especially when it comes to estate planning and life insurance. But I really challenge people to think about what is the alternative? If you don't have those things in place, how does that affect you on a day to day basis? If you can't work for a few weeks or a few months at a time, how would that impact the money coming into your household? How would it affect it? Think of your mortgage. Think of your kids, soccer games or their camps, the summer camps, like just those basic things. How would you pay for that? You probably are going to have now additional medical expenses. How are you going to pay those copays and, all those things? And when you do get that coverage, even at work, you're only getting covered for 60% of the income that you make. So you should have supplemental income protection. That's something else that a lot of people don't realize that they can get. And you can get that outside of work so that it's not tied to your employer. It's not something that you feel like if you're in a position or a job that you don't like, you feel like you're trapped there because of the benefits. No, you actually have many options outside of an employer to be able to have certain protections in place. So certainly you want to make sure that you're doing those fundamental things before the investing and the taking risks and those kinds of things.
Leslie, why do you think we are so conditioned to skip these fundamentals?
Because no one talks about it. Before you graduate and you get your first job, people are telling you to put money in the 401k. In fact, the Secure 2.0, which was passed in 23, I can't remember what year, I think it was 2022, Secure Act 2.0 requires companies now to automatically enroll new employees into their 401k plan if they have it. It is now a legal requirement and it might be just 3%. But number one, You have no idea what that person's financial situation is. They might be a new college grad. They might be a newly divorced mother with kids. They might need every dollar of that paycheck to come to the household first. Number one, to build up those savings. And number two, to just take care of any household expenses. Then, when they are ready, opt into a retirement. The government has now even made it required companies to do this. So the employee has to opt out. So instead of it being opt in to a retirement plan, they're now automatically enrolled and they have to consciously think of opting out. And I understand the motivation behind it. Just in general, Americans are really poor savers. And our community in particular are big spenders. That could be a whole podcast right there. But we are definitely a very consumer focused community. And we need to be less on consumption and more on the savings and conservation and preservation and the building of our income and our wealth. No one talks to us about getting insurance. I think also historically, especially in America, insurance has been looked at as a little predatory. If you think of our parents or our grandparents' generation, people always tell me about this. The insurance guy would come knock
Come
on the
knock
door
at
to
the
collect
door.
their,
Yes.
and then at the end of all those years paying, like they may have had, just enough to bury their
Right.
mother or, whoever it was. So, and that is still a type of insurance that exists today. It's called final expense. There are different, ways that life insurance can be used. And again, it's just a lack of education, right? It was a lack of education that was provided to our families. So they didn't understand the importance.
Absolutely. That makes a lot of sense. Let's explore for a minute the cost of being unprepared. And so we both reference the enormous number of Black women who lost their jobs. I think by April, it was already 300,000. And for many, it wasn't just about loss of income. It was about the loss of insurance, depleted savings, if there was savings, and having to take the first opportunity just to survive instead of being strategic. You talked a little bit about financial preparation, but what is the financial preparation before the crisis actually looks like? Like, what can we learn? You mentioned liquid savings, you talked about income protection insurance, you talked about life insurance. What should leaders be doing right now if they are sensing instability in their organization?
The first step, like you touched on, is building up that savings. Maybe you just forego that vacation you have planned next year. Maybe we just make sure we keep those funds tight. Let's just revisit what we're spending our money on today. I'm never going to be the person to say, oh, you got to stop going to Starbucks. You're wasting that $5 a day. Like that $5 a day isn't going to make a huge difference. And plus, I'm all about you earn your money. You should enjoy your money. You also want it to grow because you want it to last and you want to enjoy your life. So my thing is you need to assess where you are. So first, look at what you're spending your money on. Are there some things that you can change? Maybe as your pay increases, let's say that your pay increases 3% a year. Does your spending have to also increase by 3% a year? If your spending just increased by 1% instead of the 3%, that could save you substantially over time. So the first thing is really just assess where you are, assess what your spending is now, set that target of a minimum of 3 to 6 months of your living expenses. So the mortgage, the insurance, if your kids are in private school, car notes, just all your expenses, you should be able to cover at least 3 months worth of that in your savings. I say aim 3 to 6 months. That'd be the first step. And if you have trouble with saving, I have a tool that I've used with my clients that has been extremely helpful. I'd actually told them I'm going to get them to record a couple testimonials, but basically what it does is it automates saving instead of automating the spending. And so that's been a really strategic tool that I've used with clients, but get that savings put aside. Number two, get that income protection put into place. When you go through your annual enrollment, make sure that you opt into it. It's usually maybe $5 or $6 a paycheck or something like that. It's usually a very, very minimal expense. But I also want you to look into getting supplemental income protection. And if you can, try to get it outside of work. Again, because it will be there whether you get laid off or not. Thirdly, would be getting some type of life insurance. Again, a lot of employers offer it as an employee benefit, but if you are no longer employed by them, you no longer have that benefit. Look for getting that coverage outside of work. And again, it's tied to you, not your employment. These are some of the fundamental things that you should do, like just while you're employed, make sure you have that financial cushion, that emergency fund that other people may know it as. Have those funds set aside and have that insurance set aside because you just don't know what can happen. The other group that kind of falls into that, they know that, they may be losing their job at some point, or if they just know that things are happening and they're thinking, this might be a good time to just start my own business. Maybe I'll just start consulting in this field or something like that. I would say go ahead and start that process. Start to get the LLC or whatever, legal formation you want to put together for that business, even while you're working. I don't want you to do anything illegal because when you're let go, you usually don't have a lot of notice and you want to already have certain things in place. If you apply for that income protection while you're employed, the amount that they're able to give you is based on your current income. So if you wait till you're fired to start looking into these insurances and your company has only earned 25,000 when you were earning 200,000, you're only going to get coverage for 25,000. You don't want that. You really want to have that coverage for the income that you've been used to living off of. Again, I'm picking arbitrary numbers, but you want to try to do some of these things while you're still employed, put those things into place so that when that axe comes down, you've been proactive and been able to put, some protections in place.
That is so powerful because entrepreneurship, so many Black women are leaving their jobs, have left their jobs. But that's the segment that has the most growth in entrepreneurship in the last 10 years. Without financial infrastructure, is just trading one vulnerability for another.
Yes. And we typically are solopreneurs, right? In those situations. So those 300,000 women, just women who end up leaving corporate or leaving the employee side of things to become their own boss, a lot of them are solopreneurs. They're trying to do it all by themselves. They might have a spouse who helps out, might bring in their kids to help out a little bit, but they're primarily doing that work. They don't have like a whole big team. So they are the income generator for that business. If something happens to them, that income is not going to be coming in anymore.
Right.
So we have to think about that. And there is actually a type of income protection for business owners. You have the same disability income or income protection for the business owner, but you can also have a type of protection put in place for the business itself. If you're renting a space, maybe you do have employees, maybe you just have some business expenses that actually can also be covered. There's a type of insurance for that. So many companies go bankrupt or just go out of business because that owner got sick and wasn't able to keep up with certain payments. Maybe you have a business loan. You don't want those payments to default. So there's insurance that will cover those kinds of things as well. So you just need to speak with someone who can help educate you on all of these types of things so that you can be as proactive as possible.
That is important. And also, one thing that you mentioned is about health insurance that's not tied to your job. Where do people even start for health insurance, especially entrepreneurs?
Unfortunately, there aren't a lot of options. I think that's why Affordable Care Act was put into place, right? Because I don't know why, but unfortunately in this country, your health insurance is tied to your employment. It doesn't make any sense. I grew up in Canada. We have health coverage, doesn't matter if you're employed or not. In most countries, it doesn't matter. It's not tied to that. But here, if you don't have health insurance through your employer, there are options. ACA is probably the first option. But as your business grows and if you have more and more employees, there are organizations called PEOs that even as few as 3 full-time employees, they will bring in under their belt. And basically what they do is they essentially add you to their master contract. And so you're able to get health insurance at the rate of like a Fortune 500 company, as opposed to the cost of when you're just an individual, which is, can be really expensive in some states, especially. And of course, the older you get, like with any type of insurance, the older you get, the more expensive it gets.
I didn't know about PEOs. I'll have to look that up. I want to shift from where we are now to some financial truths, things that you wish more people understood. So, Leslie, let's talk about what most people get wrong about financial leadership. Why are we taught to prioritize investing, stock market, real estate, crypto before we have the proper insurance and savings?
Like I touched on, right? We have whole cable networks dedicated to this. And so just take a step back and think about that. Why is that? Why are we now automating people being enrolled into retirement plans? Why has that become law? Why is this like the top behavior? And why do we do it? Like, why do we follow? Why do we accept? It's the system, right? It's just the system that we live in, and we have to understand how to play the game. This system is set up for the investment institutions to make money. It's set up for the banks to make money. And of course, the IRS wants to make money. I hate to keep coming back to the 401k, but it's just what every people are very familiar with. A 401k is basically saying, I'm going to reduce my tax bill today by putting a contribution into this retirement account. And I'm just going to let it grow and grow and grow until I'm ready to retire. Nothing wrong with that, except most people don't understand that along with that contribution is that portion of the tax that you didn't pay today. So it's like this ongoing compounding tax bill growing inside of this retirement account. So, just to pick easy round numbers, maybe you would have paid $1,000 in taxes today, like this year, but that $1,000 is also invested in the market and that's growing at whatever average, rate that it's growing at. So now that $1,000 that you could have just paid today has grown to be, I don't know, I'm making up a number, $7,000, $8,000 that you have to pay later at a time when you're not working anymore. Because of that, the IRS is saying, well, hey, I'd rather wait X number of years to get $8,000 than get that $1,000 today. So they love retirement plans. They get way more tax dollars from retirement plans than they do from, people who are just putting money into a brokerage or just investing as a Roth or after tax account. So the IRS makes more money. The custodians like the Fidelities, the Schwabs, all of them, they make way more money. And of course, all the, wealth advisors, they make money. So I am, in that space, I'm a financial advisor, but I'm not securities licensed. So I cannot manage people's money, but I can help them understand how it works. I've chosen to not be in that space because I am more focused on helping people grow their money outside of the stock market because there are options there as well. It could be real estate investing or, other things that help to expand your wealth without the risk of the stock market. And I don't mean to be poo-pooing on the stock market because it has its place, but I think you should have a balanced portfolio, meaning managing certainty and uncertainty within your overall financial portfolio.
That makes sense. One thing that I'm getting from you is high income doesn't equal financial security.
Not necessarily, especially if you don't understand how to minimize your taxes, because the more money you make, the more earned income you have, the higher tax bracket that you're in. So if you don't have strategies to reduce the taxable income, you're going to net less in your pocket. But then if you don't know how to manage that money, if you're overspending or you're not investing in different ways, then yeah, your money is not going to grow and accumulate as it should. The other thing I will add is feel like social media is like a double-edged sword. It has done a really great job of helping people to be much more aware of different things. Like you mentioned crypto, right? Like I don't know how many professionals are encouraging their customers to invest in crypto, but the volume, the onslaught of information and posts in social media and that type of thing make people think, oh, this is legit and I should be doing this or I should at minimum be considering it. Once you consider a lot of things, right? I encourage people to learn as much as you can about something and then determine if with your risk profile and the time horizon that you have, does something make sense? Like crypto, even investing in the market, because everything is about time. We should start these things, saving and investing as early as possible and getting insurance as early as possible. Because, like I mentioned, the younger you are, the more affordable these things are. The older you get, the more expensive they get. It's just based on actuarial science. Older we are, the more likely we are to be more sick, the more likely we are to have had an illness or injury take place. So when you're young, that's like when things are really affordable, but you have the advantage of time. You can't get back time. But if you were to save, even if it was just like $100 a month starting at age 21, and you're doing that all the way up, for 40 years, that's very different. You're getting a very different outcome than waiting till you're 45 to start saving. I don't need every Louis, every Gucci, every whatever. I need to start investing that money and growing it. You don't have as long of a time horizon for that money to grow. So everything's going to cost more or take more for you to get to that same endpoint. So I think that in our community, we tend to be very consumption focused. Not all of us, I hate to generalize, but too many of us are more focused on brand names and showing or having the appearance of having things. But really, the wealthier people who grow their money, subtly, right? They don't necessarily flash what they have. There are millionaires next door that you may not even know. And it's just because they don't spend it all on high-end cars or, things that depreciate quickly. They are investing their money and it's growing.
Let's get practical. You're creating something really valuable for our listeners. So, Leslie, you mentioned at an earlier conversation, you will create a checklist for our listeners, one for household financial protections, one for business startup considerations. Please give us a preview. What are on those lists?
So I touched on some of this before, but the first thing is assess where you are today, right? Just like when you go see a doctor, you don't just walk in there and say, "Hey, doc, prescribe me pill X." He says, "Okay, at first I got to do an assessment. He's going to check your vitals and check all of that." So I'm asking you, check your vitals, check the status of all of your accounts, like I touched on, and not just bank accounts and retirement accounts, check your insurances. Do you have enough coverage on your house? We're here in Florida. We know that the price of, property insurance is skyrocketed, but you still want to make sure you have enough protection, right? If something happens to your home, can you cover it? Or is that going to wipe out all of your savings because you didn't have enough coverage? Make sure you have maximum coverage on your property. If you have jewelry, make sure that those kinds of things covered. So make sure you have maximum protection. Do an assessment. Do or do I not have enough savings put aside? Do I or do I not have enough insurance put aside for my home, my property, for my family, for my income? All of those things you want to think about. If you are a business owner, same type of thing. You want to do the same type of assessment for your business. How many employees do you have? How many are part-time? How many are full-time? How many of them are key employees? Like if they left tomorrow, your business would be hurt. Who are they? What kind of things can you put in place to, make sure that you're able to retain them when someone's not, poaching them on LinkedIn? If you get sick or hurt, like I mentioned before, there's income protection for the business, and you should also have income protection for yourself. Make sure you have, if you're in the position to be able to put employee benefits in place for your employees. Like I mentioned, it can be costly, and that's why a lot of business owners aren't able to put that in place until they get to a certain point. But a PEO might be an option for you because you're able to leverage their pricing for things like health insurance and, other benefits. Off the top of my head, those are some of the things that I would say we want to check for. Those are the fundamentals. And I always say certainty before uncertainty. So make sure that the savings, the insurances, all those things are in place, just like a house, right? You want to have a firm foundation, solid walls before you start putting all the interior walls and, decorating and everything, hanging things from the walls. The whole thing could come crumbling down if the structure isn't sound.
This is exactly what our listeners need. And we'll have a full downloadable checklist in the show notes. So, Leslie, before we wrap up, any final thoughts? What do you want our listeners to remember from this conversation?
I guess my closing thought would be, especially speaking to Black women and Black women leaders, we have to deal with a lot, whether it's in our careers, our businesses, our families. There's a lot that we take on, and we have to be willing to ask for help. We don't have to feel shame about not understanding certain things. I hope that I can be an open door that you can reach out and contact me, even if I don't have the ability to help you with something. I can look within my network to try to help you. We have got to, like I said, not feel like we have to be super women all the time. Let's extend to each other with the skill sets that we have, and let's help each other. Let's help bring each other up because we really can only depend on each other, right? Your employer, as good as they may be, their focus is their profitability and potentially their shareholders. And there will be times that they make decisions that prioritize them over you as a person. So you make sure that you're being proactive and taking those steps that we talked about so that you are okay in case of the unexpected.
That is so powerful. This conversation reminds us that revolutionary leadership isn't always loud. Sometimes it is as quiet and strategic as making sure your financial foundation is solid. Leslie shows us that when leaders prioritize protection over speculation, fundamentals before flash, preparation before panic, they can create something far more powerful than wealth. They create freedom. Freedom to say no to opportunities that don't serve them, freedom to take strategic risks from stability, not desperation, freedom to lead boldly because they know if the unexpected happens, you are protected. That's not playing small, that's playing the long game. And that's revolutionary. So here's what I want you to do this week. If you are in corporate space or working inside an organization, take inventory. If you lost your job tomorrow, how long could you be strategic about your next move? Is it 3 months, 6 months, 12 months? Start building that runway. If you're an entrepreneur or a business owner, evaluate your insurance coverage. Do you have income protection? Is your family protected if something happens to you? Don't wait. Get the fundamentals in place now. And for all of us, download Leslie's Financial Protecting Checklist. You will find the link in the show notes. Go through it, identify your gaps, then commit to closing those gaps, one gap this quarter. You can find Leslie and Rebel Rock Wealth and You Bet Your Assets. All the links are in the show notes along with that checklist. Leslie, thank you. This has been powerful, and I am so grateful you shared your wisdom with us.
Thank you so much for having me.
And now for my favorite part of the show. This is where women share their experience with my teachings.
Hi, my name is Sherry Boston, and I serve as the district attorney for DeKalb County Judicial Circuit in DeKalb County in Georgia, just outside of Atlanta. What drew me to Black Women Lead in 2025 is that I've had the pleasure of being a part of Black Women Lead since its inception, and really have been honored that Vera created a space that allowed for Black women chief elected prosecutors to come together and to share ideas and stories, challenges, and resets on how to do this work professionally as well as personally, knowing that we're dealing with very different dynamics than our white counterparts. And the challenges that we face and the support that we need to give one another to get through challenges that are really specific to being a Black woman leading in this space that others might not fully understand or might really not know. And so having this space and creating a sisterhood of my DA sisters that I can lean on and can call to bounce ideas off of has been immeasurable. I think one of the great things about our retreat every year is that having a few days to come into the sanctuary or our safe space allows us to get rid of sort of the office for a couple days and be together where we can really let our hair down and really be with people with your guard not up and with the opportunity to really meditate, think, strategize, reflect on how you are leading in your community, how you can do better, and more importantly, what you might need to be more successful. This year, having Kerry Mitchell Brown lead us through self-reflection was really incredible because I felt like really for the first time I was engaging with a facilitator that was intentional about understanding how I'm operating in this space. And that the challenges that you face as a Black women leader means that you sometimes have to move in a different way in order to be successful. And unless you have someone that understands that that's a challenge, then it really makes it difficult to take advice or formulate a plan. What would I tell another Black woman leader in my network who's considering and participating in this kind of learning experience? I would say do it. 100%, just do it. If you have the opportunity to engage in any type of professional coaching, leadership coaching that allows you the opportunity to be as open and vulnerable and free, but in a safe space, you should take that opportunity because they don't come along very often, if at all. I think in order for us to be our most successful selves, for us to be able to show up and continue to show up in these spaces where we have routinely been absent, we have to have specific development and resources to get us there because we can't do any of this alone. I rely on my DA sisters, but all of us rely on organizations and professionals that can also lift us up when we're feeling like we just want to give up.
Thank you for sharing your brilliance, your compassion, and your commitment to Black women, leading with power, ease, and strategy. Thank you for listening to Revolutionary Leadership. If today's conversation sparked something in you, subscribe wherever you listen to podcasts and share this episode with another change maker in your life. Until next time, keep leading with purpose, joy, and revolution.